Indian rupee that has recovered a bit in early trade as dollar index is down from Monday's high. Now, demand for dollar pulls back the Indian currency towards fresh lows. India's December CPI inflation also comes in lower than expected at 5.2%, while overall the wholesale price index for December comes in at just 2.4%. Latha is here to decode all this for us in terms of give us details in terms of inflation numbers, what's happening to the rupee, update on that front as well. Latha, good afternoon.
Well, let me start first with the inflation number and the CPI number, because that's the index which the Reserve Bank watches to set rates. That came in, of course, yesterday at 5.2% for December, lower than the CNBC-TV18 poll of 5.3, lower than the November 5.48. So a good number on the whole, largely pulled down by core CPI, which has fallen to 3.6 from 3.7 in the previous month. The one that didn't move as low as people would like, food inflation, 8.39 was what we got. Our poll said 8.3. Of course, it's lower than the November 9.04, but not low enough. Vegetable prices, of course, were the ones that has really helped in pulling down food. They've declined sharply, but they still remain high at about 26% up year on year. But again, it's a 4-month low. The cereals and eggs and fruit also were slightly higher, which was a bit disturbing. But vegetables are expected to decline sharply in January. We have some nowcast numbers for tomatoes, onions and potatoes, and that looks like we're going to see the inflation falling a goodish bit. Very quickly on the WPI wholesale price front, that has never been a big bother. It has been around the 2-3% mark, but it's come in at 2.37, in line with what our poll said. Food and wholesale index also has fallen, not as much as we would like, 8.5%, still looks high, but it is a 4-month low. And it's the manufacturing inflation, or core WPI, which is really low, 0.7%. I mean, prices have hardly moved on the manufacturing sector at the wholesale level. So what does all this mean for rates? Now, there is a growing section in the market which believes that there is space for a Reserve Bank rate cut in February, because, of course, WPI and core CPI are way below the 4% mark of the Reserve Bank. I guess much will depend on how the currency markets behave in the first week of February, whether they give some consolation to the Reserve Bank that the worst of depreciation is over. Well, with that, let me come to the rupee. The currency was expected to appreciate today after a terrible Monday that it had when it fell, had the sharpest fall in 2 years. The expectation that it would do well was because the dollar index overnight had fallen from 110 to 109.6 on some talk that Trump may not rush all the tariffs, but would do it gradually. The rupee has appreciated, but it is still appreciated less than the other EM currencies. They were appreciated between 0.2 and 0.5%. We've appreciated just 0.02. And at one point, the rupee lost all its gains and even touched a new low of 86.60. But it's about that range. The expert opinion that we have got is from Goldman Sachs. Their belief is that this is going to be a dollar strength year. Stronger for longer is what they think you will get in terms of the dollar. And that the rupee needs to fall more. It will probably move towards the 88 mark, but it will still outperform all other or most other emerging market currencies. Maybe you want to hear out Kamakshi Trivedi, the Goldman Sachs FX expert.
What you're seeing now is a little bit of a release of the very tight management of the rupee that you've seen. I think that's part of why you're seeing the weakness. And I also think, India itself is having a little bit of a cyclical slowdown. If you think about the rupee in comparison to the dollar, where, as I just mentioned, you're seeing kind of pretty exceptional growth, it makes sense that you see a bit more weakness in the rupee. But I do think that, ultimately, as we look across the year, relative to other Asian currencies, the rupee will still be an outperformer, but I think there's more weakness to come versus the dollar. We think the dollar is going to be stronger for longer. We have just marked our forecasts in that direction. We think there's another 4-5% upside still to the broad dollar trade-weighted index. So, this is a combination of continued firm U.S. growth, U.S. exceptionalism, and shifts that are occurring on the rate side, but also tariffs. Tariffs are coming, and I think that's a key part of our view of dollar upside from here.
And amid the weakening of the rupee, the governments also say that US sanctions on Russian oil will not have a big impact on Indian currency. Now, government sources point to the large dollar reserves as a hedge against further depreciation in the rupee. They also point out that a weak rupee will help exports, bringing in more dollars to the coffers, while the growing renewable sector will reduce the country's dependency on oil.